This is MindSpark. Hey there, future Warren Buffett, ready to dive into the world of stocks and make your money work for you? Let's get started with some laughs and learning. We'll cover everything from opening a brokerage account to picking winning stocks, all while keeping it fun and easy to understand. No more confusing financial jargon, I promise. So whether you're starting with $100 or $100,000, this video is your one-stop shop to becoming a savvy investor. Let's do this. Before you start throwing your hard-earned cash around, let's understand the basics. What exactly are stocks? Think of them like tiny pieces of ownership in a company. When the company does well, the value of your stock goes up. And where do you buy these magical stocks? On a stock exchange, of course. It's like a giant online marketplace for buying and selling stocks. Don't worry, it's not as intimidating as it sounds. Now, to buy these stocks, you'll need a brokerage account. Think of it like your stock market shopping cart. We'll talk about choosing the right one later. Oh, and let's not forget about dividends. Some companies share their profits with their stockholders, and that's called a dividend. It's like getting paid just for owning a piece of the company. Sweet, right? So, there you have it. Stocks, stock exchanges, brokerage accounts, and dividends, the building blocks of your investing journey. Easy peasy. Now that you know the basics, let's talk about your investment goals. Are you picturing yourself sipping cocktails on your yacht next year? Or maybe you're more of a retiree, comfortably, and travel the world kind of person. Your investment goals will determine your time horizon and risk tolerance. The sooner you need the money, the shorter your time horizon, and the less risk you should take. If you have decades until retirement, you can ride out the market's ups and downs. Think of it like this. If you're a daredevil, you might invest in riskier, high-growth stocks, but if you're more of a cautious turtle, you might stick to safer, more stable investments. The key is to find the right balance for you. Don't invest in something you don't understand or that keeps you up at night. Remember, investing should be exciting, not terrifying. Now it's time to choose your brokerage account, your trusty sidekick in the world of investing. There are tons of options out there, but don't worry, I've got you covered. Robinhood is like the Tinder of stock trading, easy to use, commission-free, and perfect for beginners. But just like Tinder, it can be a bit addicting, so swipe right responsibly. If you're looking for a more established relationship, Fidelity, Charles Schwab, E-Trade, and TD Ameritrade are all great options. They offer a wider range of investment options and more comprehensive research tools. When choosing a brokerage, consider factors like fees, account minimums, research and educational resources, and customer support. It's like dating. Find one that meets your needs and makes you feel comfortable. Chapter 4. Now, let's talk about what to invest in. Instead of betting on a single horse, why not bet on the whole race? That's where index funds and ETFs come in. Index funds and ETFs are like baskets of stocks that track a specific market index, like the S&P 500. This means you're investing in hundreds of companies at once, reducing your risk and increasing your chances of earning solid returns over time. Think of it like this. If you buy stock in one company and it goes bankrupt, you lose all your money. But if you invest in an S&P 500 index fund and one company goes bankrupt, it barely makes a dent in your overall portfolio. Index funds and ETFs are a great way to start investing because they're low-cost, diversified, and offer instant diversification. Plus, they're perfect for lazy investors like me who don't want to spend hours researching individual stocks. Chapter 5. Remember that saying, don't put all your eggs in one basket? Well, it applies to investing too. Diversifying your portfolio means spreading your money across different asset classes to reduce risk. Think of it like this. If you invest all your money in tech stocks and the tech industry crashes, your portfolio will take a nosedive. But if you have a mix of tech stocks, healthcare stocks, real estate, and bonds, your portfolio will be more resilient. You can diversify your portfolio by investing in different sectors like technology, healthcare, and energy, different company sizes such as large cap, mid cap, and small cap, and even international stocks. Remember, diversification is your best friend when it comes to investing. It helps you manage risk and weather market storms. Chapter 6. You don't need to be a millionaire to start investing. In fact, you can start with as little as $50 or $100. The key is to start small and invest consistently. One popular strategy is dollar cost averaging. This means investing a fixed amount of money at regular intervals, regardless of the market's ups and downs. By investing consistently, you're buying more shares when the price is low and fewer shares when the price is high, which can lower your average cost per share over time. Think of it like this. If you invest $100 every week, you're not trying to time the market or predict when the next crash will be. You're simply investing consistently and letting the power of compounding work its magic. Remember, investing is a marathon, not a sprint. Start small, be patient, and let your money grow over time. Chapter 7. Research 101. Become a stock market detective. Before you hit that buy button, it's crucial to do your research. After all, you wouldn't buy a car without kicking the tires first, right? When researching a stock, look at the company's financials, like revenue, earnings, and debt. Industry trends, stock valuations such as the PE ratio or price-to-book ratio, and competitors. Websites like Yahoo Finance, MarketWatch, and Seeking Alpha are your new best friends. Think of it like this. You're a detective trying to solve a case. Gather all the evidence you can before making a decision. Don't just rely on rumors or what you read on Reddit. Remember, knowledge is power. The more you know about a company, the better equipped you are to make informed investment decisions. The stock market can be a roller coaster of emotions, but it's important to stay calm and avoid common investing mistakes. One of the biggest mistakes beginners make is chasing hype stocks. Just because everyone is talking about a particular stock doesn't mean it's a good investment. Remember GameStop? Yeah, don't be that person. Another common mistake is panic selling during market drops. When the market goes down, it's natural to feel scared. But selling your investments at a loss is rarely a good idea. Remember, the market is cyclical, and what goes down must come up eventually. Instead of reacting emotionally, stick to your investment plan, diversify your portfolio, and focus on the long term. Rome wasn't built in a day, and neither is a solid investment portfolio. The world of investing is constantly evolving, so it's crucial to never stop learning. Read books, follow investing news, and watch finance YouTubers like me, of course. Some of my favorite investing books include The Intelligent Investor by Benjamin Graham, The Little Book of Common Sense Investing by John Bogle, and Rich Dad Poor Dad by Robert Kiyosaki. Stay up to date on market trends by following reputable financial news sources like the Wall Street Journal, Bloomberg, and CNBC. And don't forget to subscribe to my channel for more investing tips and tricks. Remember, the more you learn, the better investor you'll become. So keep that brain hungry for knowledge. Once you've invested your money, it's important to monitor your portfolio regularly and make adjustments as needed. Think of yourself as your portfolio's personal trainer, making sure it stays in tip-top shape. Check your investments every few months to see how they're performing. Are your investments aligned with your goals? Do you need to rebalance your portfolio? Have your risk tolerance or time horizon changed? As you gain more experience, you can start picking individual stocks if you'd like. Just remember to do your research, diversify your holdings, and don't go overboard and turn into a stock-obsessed maniac. Investing is a lifelong journey, and your portfolio should evolve with you. So stay engaged, keep learning, and enjoy the ride. And there you have it, folks. Follow these steps, keep learning, and soon you'll be investing like a pro. Remember, the stock market is a marathon, not a sprint. Happy investing. We covered a lot of ground today, from understanding the basics of stocks to picking the right investments for your goals. Remember, investing isn't just for the wealthy, it's for anyone who wants to build long-term wealth and achieve their financial dreams. So what are you waiting for? Open that brokerage account, start investing, and watch your money grow. And don't forget to subscribe to my channel for more investing tips, tricks, and laughs. See you in the next video.